Warehouse loans explained and how to finance industrial real estate. And the industrial real estate sector continues to be one of the strongest performing asset classes in commercial real estate. And why? It's driven by e-commerce growth and supply chain modernization and manufacturing expansion and last mile distribution demand. And warehouses have become highly desirable investments for both owner users as well as investors. So, whether you're purchasing a distribution center or a flex industrial building for your business or a logistics facility or just a simple warehouse property, understanding your financing options can significantly improve your investment returns. And this guide will explain how warehouse loans work and who qualifies and which financing options may be the best fit for your situation. So, what is a warehouse loan? Well, a warehouse loan is a commercial mortgage that's used to acquire, to refinance, or renovate, or even construct industrial properties. And some of those could be distribution centers or logistics facilities or manufacturing buildings or flex industrial properties or warehouses or office condos or flex condos or fulfillment centers or industrial outdoor storage properties or IOS. And warehouse financing is usually available through banks, credit unions, SBA, life insurance companies, debt funds, and private lenders. And at CommLoan's Empower program, borrowers will gain access to over 700 lenders through a centralized commercial lending marketplace. So, why lenders like warehouse properties? Well, industrial properties have become increasingly attractive because they have strong tenant demand, and e-commerce growth has increased demand for fulfillment as well as distribution facilities. There's longer lease terms, and industrial leases often range from 3 to 10 years, which creates predictable cash flow. There's lower operating costs. Warehouse properties typically require less maintenance than an office or a retail property ever would. But there's a flexible use, and many warehouse facilities can accommodate multiple industries and various tenant types. So let's talk about some common warehouse loan programs. So banks is a good category, and they're best really for owner-occupied properties and stabilized investments with strong borrowers. And typical terms are, say, 65 to 80% loan to value with a 20 to 25 year amortization and 5, 7, or 10-year fixed rates with recourse. And advantages there are there's competitive rates and lower fees and could be more flexible with a banking relationship. But there's also SBA 504. And these are best for owner users occupying 51% or more of the building. And typical terms are up to 90% financing, longer term fixed rate options with 25-year terms. And the advantages there are there's some low down payments. You have fixed payments for a while, and it helps you preserve working capital by putting less into the project. And this is often the most attractive option for business owners purchasing their own warehouse. There's also SBA 7A loans, and these are best for, say, a smaller warehouse acquisition or a mixed-use industrial type hybrid project. And typical terms there are up to 90% financing with the 25-year amortization. And the advantage of the 7A is its flexible use of proceeds. Equipment financing can often be included. So there's debt funds as well. And these are best for more of a value add acquisition or a light industrial repositioning and can get you a little bit faster closing. And typical terms would be 65 to 80% loan to value, interest only options with, say, 12 to 30 6-month term. And the advantages are faster approval, more flexible underwriting with less documentation. But construction loans, these are best for, say, ground up warehouse development or an industrial park or flex building suite or build to suit type project. And typical terms are, say, 60 to 75% loan to cost, interest only during construction, and can be converted to permanent financing upon completion. So what do lenders look for? And property quality is number one. So building age, the ceiling heights, the loading docks, trailer parking. Are there access to major highways? Is there market demand? Does the borrower have experience with warehouses? And industrial investors with a successful track record generally receive more favorable terms. Cash flow is the other one. Investment properties are typically evaluated using debt service coverage ratio. And most lenders will prefer to see a minimum DSCR of 1.2 to 1.25 or higher, but also financial strength from the sponsorship group. And lenders will review credit scores and liquidity and net worth and your existing real estate portfolio. So let's talk about some warehouse loan rates in 2026. And current commercial warehouse loan rates can generally range. We'll talk about the loan type and the typical rate range. So bank loans 675 to 8.25, an SBA 504 6.25 to 775, and a 7A is 7.5 to 10.5. Debt funds 9.5 to 13.5, and bridge loans say 10 to 15%. And actual pricing will depend on property location and occupancy and the quality of the tenants, the loan size, and sponsor experience. So, why industrial real estate remains attractive? And many investors continue allocating capital towards warehouse assets because of growing e commerce demand. Manufacturers have been reshoring to the United States, but also to diversify their supply chain. And there's strong rent growth, and there's limited new inventory in many markets right now. And markets throughout Texas, including Houston and Katy and Fulshire and the broader Gulf Coast region, continue to experience strong industrial development activity. So let's talk about how CommLoan's Empower program helps you. And traditional commercial lending often requires borrowers to interact with numerous lenders individually, whereas CommLoan's technology platform gives you centralized access to hundreds of lending sources and automatically identifies financing options that fit a property's specific characteristics. And that platform includes access to banks, to credit unions, to life companies, to debt funds, SBA lenders, agency lenders, and private capital sources. And this helps borrowers compare multiple loan options, most importantly, save time, but improve your execution certainty, and finding specialized industrial lenders is something we can help with. Now, warehouse financing remains one of the most active segments of commercial lending. And whether you're purchasing your first warehouse or expanding a distribution operation or refinancing an industrial portfolio or developing a logistics facility, choosing the right structure can significantly impact your returns. And remember, the best loan isn't always the lowest interest rate. It's the financing solution that aligns with your investment strategy and your business goals and your long-term exit plan. So for warehouse financing options nationwide, please contact me. It's what I do. Bill Rapp. I'm a director of capital advisory with the CommLoan Empower program. You can visit my website at billrapp.commloan.com. You can start a pricing quote as well as schedule a consultation, and I'd love to have a conversation with you. So thank you for watching and have a good day.